If you are new to stock market investing, it's completely normal to feel anxious when you see stocks falling. That red screen, yeah, it can really mess up with your head. But here's something most people don't realize. You don't have to get every investment right. Let's break that down. Imagine this. You invested 25,000 dirhams in 5 different stocks. Now what happens when 2 of them don't perform? They just keep falling year after year. But the other 3, they grew steadily at 15% compounded annual growth rate. Would it still make sense to stay invested in that portfolio? Yes, even with some loser in the mix, your 25,000 dirhams can grow to almost 1 million dirhams in long run at 13% CAGR. Now let's look at worst case scenario. What if 4 out of 5 stocks go to zero, total loss, but just one of them gives you a steady 15% CAGR? You don't panic, you don't sell, you stay disciplined, and you hold on to that one stock for 20 to 30 years. Guess what? Even if you lost 20,000 dirhams on other 4 stocks, this one winner still puts you in profit. That single investment can make up for all your losses and still generate more wealth than a fixed deposit. Just for perspective, your 25,000 becomes over 300,000 in 30 years. That's 3 times what most safe assets offer over the same time. That's quite the power of compounding. And this isn't just theory, it's real. It's happened before. After multiple stock splits, $1,000 investment in Amazon's IPO in 1997 would now be worth over $2 million at current price. If you had invested 10,000 rupees in Infosys back in 1993, you would be sitting on crores today. And same story in UAE. Emirates driving company Drive did a 12 is to 1 stock split in 2024. A small 1500 dirhams investment in ADIB years ago would worth over 18,000 dirhams. One good decision held for long enough can carry your entire portfolio. But here is the catch. You need to be able to hold on to that investment for long enough. These days, most people don't tag their investment with time based goals. They just invest randomly in one or two asset classes. No plan, no direction, just chasing past returns. Instead, try this. Align your investment with your goals, not with the performance charts, not with hype. Ask yourself, why am I investing? If it is something for short term, say within 12 months, choose safe assets that protects your capital. But for long term goals like your child education or your own retirement, you can absolutely count on the stock market. Just give it the time it needs. Let me show you some numbers. If you invest 3,000 dirhams every month, that's 36,000 dirhams a year, and your portfolio grows at 12% CAGR, then in just 5 years, you will have invested 180,000 dirhams and your portfolio could be worth around 245,000 dirhams with 65,000 dirhams in gains. Stretch that to 10 years, invested amount becomes 360,000 dirhams. Portfolio values grow to 690,000 dirhams. Now let's say you are a committed investor and you increase your SIP by just 10% every year. So 3,000 monthly in year 1, 3,300 in year 2 and 3,630 in year 3 and so on. With that step up SIP, you invest 573,000 dirhams in 10 years and your portfolio can grow over 1 million dirhams. Now increase that time to 15 years. Your investment of approx 1.1 million dirham can grow to 2.5 million dirhams with 64% gain. That's the magic. First million is hard, took 10 years, but the second million is faster. In this case, just 5 years. So here is what beginners need to understand. Number 1, don't fear bad decisions. You will make few, everyone does, but you don't need to be right all the time, not even 50% of the time. Number 2, think long term, be patient. Compounding doesn't work in weeks or months, it works in years and decades. Number 3, create SIP for your goals. It's like planting 5 seeds. Even if 4 don't grow, the one that does can become a mango tree that feeds you for life. So here's the truth, the stock market isn't about timing the market, it's about time in the market. Compounding doesn't need perfection, it needs patience and discipline. Stay invested and ignore the noise, focus on your goals. Start early, stay consistent, and let compounding do its quiet work in the background. Your future self will thank you. If this helped you understand investing mindset and compounding better, give this video a thumbs up and share it with someone just starting their investment journey. And of course, don't forget to subscribe for the more simple, practical investment tips. Thank you. Happy investing.